What's going on, ladies and gentlemen? So the question still remains, one second. Question still remains, is the market crashing? And honestly, right now, I strongly feel that we are moving into that market correction that everyone's been talking about. I've been saying this, not that I'm some guru or some genius, but I've been saying it for a couple of weeks to keep your eyes on the market. If you haven't paid attention to what it's doing today, the market is crashing once again and is coming down very hard. So we're going to take a look at some technicals here. We're going to show you some charts and show you some things that I've been mentioning for a couple weeks. Maybe you just haven't seen the videos. Maybe this is your first video joining in with me. Again, I'm the head owner of Boiler Room Trading. So regardless of who I am, the market is coming down very hard. So I do want to share some things with you guys, some things that I have been watching, where I expect the market may go, the tickers and the ETFs that I've been trading as we've been seeing the market in some extreme volatile moments. All right, so let's go ahead and take a look here at exactly what it is I'm talking about. So first things first, let's pull up a chart. We're going to look at we're just going to use a SPY. We're going to use the ETF, the SPY. So let's just take a look here first. So I'm going to put this in full screen. And then I'm going to move me like right there. So let's look at this daily chart. So this is a 1-year chart. Okay, so looking at this 1-year chart, this in itself looks a little scary, right? So, I mean, if you're just looking for the past year, you can see that the market has really started going up. Okay, let me bring this over here too as well. All right, so for the past year, you can see that the market has been trending up, obviously. I mean, that's a no-brainer. Then we topped out here at 286. And then this is, this is a few weeks back when the market really dumped hard. We crashed from 286 all the way down to a low of about 255. You can see over here 255. We dropped down quite a bit. This was an extremely big pullback. Okay, so the pullback that started right here, this was the top. This pullback, that whole area, that's when things started to become a little uncertain in the market, where we were kind of, well, what's going to happen? Is this just a slight correction before we continue higher? It was, is this the start of the 2017, 2018 market crash? What's going? Because, any investor who's been doing this for some time will know that the market has been crushing it, especially this past year. We kind of went parabolic on the stock market almost. So for the past 5-10 years, the market's been doing very well. It's been continuously uptrending, right? So we haven't seen a really big pullback. We haven't seen any really big correction. So that question remained, and the fear was there. When is the market going to come down? This is a big question that's been thrown out there for the past couple years. We're well overdue for a correction. All right, so it's due time for this, and this is most likely the start of it. It's still early, but this is most likely the start of a market correction, a bear market. I wouldn't necessarily say the market's going to crash. Crash is a pretty, heavy word to toss around. But most people, whenever the market starts coming down, they say the market's crashing, okay? But I definitely think we're going into a bear market, a market correction. I'm going to show you a few things here in more detail on the computer about why I really think so, just mainly based on technical analysis, okay? So I'm gonna go ahead and get these things off my chart, and then let's actually look at it from a longer time frame. Let's just do the past 10 years on, a weekly chart. Let's do that. So we're gonna look at the SPY, an ETF, that kind of follows the overall market. We're gonna watch this on a 10-year 1-week chart. So 10 years, you'll see that back in 2008, we were at a low of $67. And look at this. It is just, look at this move. I mean, from $67, so from a low here, it's completely just ripped all the way to a high of 286 without pulling back. So looking at it at a 10-year time frame, you got to tell yourself, this is a really big move without any significant pull. This right here is, you know, a pretty strong sign signal that we might be going into a bearish market here. You know, and there was probably even the scare here back in 2015. That was probably a nice scare there with that big dump, and then we came back down, right? That was probably a little scary there as well. Okay, so right now we are starting to pull back very hard. And this is a lot of times what the top looks like. A lot of times, let me get this old drawing off, and I'm going to zoom in a little bit. A lot of times the top looks exactly like this, where we move up really, really strong, and then we have a really aggressive spike down. Then we recover a little bit, and then we usually kind of put in this higher low, where this high is lower than this one. And that's where we start kind of coming down hard, right? That's where we come into retest, right? This is when we start going. All right, so, you know, there's just a lot of things that are pointing to a bearish market. I mean, let's zoom back out here. So you got to think, right? So from 2008 all the way to 2018, we've gone from $67 to $286. And again, this is on the ETF. This is not the Dow Jones, okay? This is not the exact S&P 500. I'm just looking at an ETF that follows the overall market. So again, you could say from $6,700 in 2008 all the way to $28,000 in 2018 is where the market's gone. That's a really big move without seeing any significant pullbacks. Okay, this pattern we're starting to see here at 286, this is a very common pattern I look to use when shorting stocks. A lot of times the top will come after a long uptrend, and it starts with an aggressive spike down, a bounce back up to try and, you know, reclaim its highs. When it fails, it usually rolls over and dies. Okay, so look at this 10-year chart, steady grind up, no pullbacks, we're just starting. But think about it, think to yourself, where would this thing go? If this is really the start of a downtrend and a bear market, how far are we really going to pull back? If that's my question, is where exactly would we pull back to? Well, that's the top. We're probably going to pull back to about, you know, the $200 level or $175 level. Okay, this is where I personally think we're gonna come to, right where this kind of this moment of consolidation, kind of sideways trading on the market, where we kind of hovered around this $80, or sorry, not $80, but the 18,000, the 200,000, $213,000 mark. I think this is exactly, if in fact this is the bear market and we're coming down, this is exactly where we're going to find some type of support, some type of, you know, consolidation before maybe picking back up and running. So this could take as long as, you know, a year to 2 years to take place, to fully get down to those levels. You know, this isn't supposed to happen in a day or 2 days or 3 days. This could be the start of a bear market that leads to a 2-year-long downtrend, right? So be prepared. This might in fact be the top. All right, so definitely be prepared. It's no joke. I mean, it definitely looks like we're heading into a bear market, ladies and gentlemen. Real quickly, I'm gonna take a look here, and we're gonna look at the yearly chart, 1 year, 1 day. This is what we've been sending out kind of in our newsletter and talking to our members in Boiler Room Trading about every day, is that, you know, since the market had that aggressive pullback, it's been trading in this pattern where it bounced and it's trying to go higher, right? This is where it was trying to go back up and retest these levels of 286 or, you know, 28,000, and it failed to do so. But we're gonna show you this pattern really fast. And this is all based off of doing trend lines, really. Let me get my drawing tool here. All right, so you can see that after this aggressive pullback, we spiked up, we pulled back again, spiked up again, and pulled again, right? But if you follow it from the lows of each candles and you draw your trend line, you could have predicted that today could have been a very, very red day on the market, because we were coming back on the, you know, the market was pulling back to this previous trend line support. And once it broke, it just started coming down really, really hard today. This is what we expected. I actually traded today, you know, started off a little rough, but now ended the day up $2,523, primarily from trading a few ETFs and ETNs that revolve around the volatility in the market. All right. So again, there's a lot to know about what's to come if this is the start. So what I'm getting at is short term right now, short term, we just broke down from a sort of a bullish pattern. We were in a bullish little uptrend for a brief moment for about a month. And now we are breaking through that trend line. We're starting to come down. So this could really be the start, right? Because I mean, look at it here. I mean, if you're not too familiar with trend lines, I apologize. But for those that are, they'll understand that we were moving up here. And as soon as, as soon as we broke through, let me map this out a little better. See, we had our bounce here. Then we bounced again. So once we put in a low, then we put in this higher low, because you can tell this low is higher than this one. Once we put in this low, we could draw this white trend line up and say, okay, we're following this trend line. We may bounce here, but we may break down. And if we break down, definitely expect a big red day because we've been following a strong trend. And once that trend's no longer valid, we're going to go the other direction. So now we're starting to go down. And there's a lot that we can do with this, all right? So with all this information, with what I'm telling you that the market may be coming down, what does that mean? That means if you're holding blue chip stocks, stuff like Facebook, Amazon, all the bigger name, Coca-Cola, right? Stuff that follows the overall market, expect that those are probably going to start going red. Facebook, Apple, Google, those are going to probably start coming down as well. That's what that means. Penny stocks, they're not as affected as much. What do I do when the market's starting to come down like this? What am I paying attention to? I'm paying attention to ETFs like UVXY. Hold on, let me pop this up. I'm paying attention to stuff like UVXY and TVIX and different volatility ETFs or ETNs because ideally, in simplest terms, they trade kind of opposite the market. So let me show it to you like this. All right. This might, clear things up for you just a little bit. So here's the market coming down today, and this is an ETF fund, UVXY. So when the market is going down, or when the volatility in the market is really high and increased, and there's a lot of selling pressure on the VIX, you'll notice that this ticker UVXY will go up. And there's other ones that are similar to it. These are just the ones that I tend to follow the most. But as you can see, as the market's coming down, this is going up. So this is an ETF you can play that if the market is seeing really, really big red days, you'll tend to see some pretty predictable moves here on a ticker like UVXY, a ticker like TVIX. So I'm just kind of saying that if while the market's in these uncertain times and coming down, these are two tickers that I always highly recommend people watching and people essentially trading. With that being said, again, understand that the market's at a pretty uncertain time. That's all I have for you. Just want to do a little quick analysis and break down that the market, it's a little choppy right now. So you guys should, get prepared because we might start, in fact, going red. So if you guys have any questions, comments, please leave them below and check them out. If you enjoyed the video, please give us a like and subscribe. Check out the description box. That's how you can stay in tune with what it is that I do and our whole trading team. All right, guys. So take care and make sure, as always, to stay green.